All right, everybody, welcome back to the Cashflow Chronicles. We are blessed today to have the Stephen Fiorillo, aka at Dividend Streams, and as always,
nah, he doesn't get any privileges, man. He can't get privileges right now. He keeps trying to pitch us on block. You don't get privileges by being a blockhead.
we were
blockhead tomorrow.
We were fortunate to spend the last hour with Steve chatting about stocks. That's why we're a tad late. So that's our fault. I didn't want to interrupt Chris. He was on a roll giving Steve the business about why he's not investing in block. And I'm in agreement.
Not your fault. It's my fault.
So we hope that you guys are having a phenomenal Thursday. The markets are high. The markets are up. It's not December 3rd. It's December 12th. Apple is at $247. Amazon's at $227. Bros is at $52. Google's at $191. Believe it or not, Palantir still needs to come down. It's at $73.70. The SPY is still above 6,000. The Qs hit 20K. We're at 528 on QQQ. Bitcoin is just below 100K. Oil is at about $70 a barrel, and Henry Hub is tracking in on 350 cents. Gentlemen, how are we doing?
Good. We just spent an hour talking about an oil company that we like, but we don't want to get into right now. It was a really interesting way of looking at things. I think it was great. I think exercises like this are what investing is supposed to be like. So each one of us has our own little expertise in different things. We're able to layer on why something would make sense, why not, and then we came up with a good consensus on what we should do. I think this is something that we should actually do more often, where if we each like a company, we should kind of present it and see how the other person feels and see if there's actually some layer of convincing we can do, whether that be through actually researching the topics and then, and then being able to address it. And I think if we do that, we'll end up on the right side of the investing equation. So,
Steve, before you give your intro and tell us how you're doing, do you have a glass of milk handy today?
Handy, no. Am I going to have a glass of whole milk and some Tate's cookies after this? Absolutely. While I watch TV.
Oh my God, what are you going to watch?
I don't know yet. It's going to be a game time decision.
Game time. You know what? I just realized that it wasn't a good Thursday night football game anyway that was supposed to be on, so I'm not that upset. If it was anything different, it might be a little bit different story. But
what are you drinking? Is that a Modelo?
No, I wish. No, it's a Spindrift. It's a sparkling water.
You know what I've been drinking lately that's really good? Modelo, but like the salt and lime. Oh, it's the best. Salt and lime Modelo. That's my beer choice now. Yeah.
All right, gentlemen. So, Steve, do you want to give your monologue, or do you rather us do the intro first?
No, just get to it.
Get to what?
We're here to analyze a company. Let's get to it.
Okay. No intro today because Steve is on his fancy pants. Steve, what company are we analyzing?
I heard we were analyzing the one and only, the cheapest in the Mag 7.
Google, baby.
It's been a company that I've been holding for quite some time, so I want to hear these guys because I know you've been in it for a while, Chris, as well, in and out of the stock, but I've been holding it off and on. Well, I guess just on for me since like 2019. So I'm curious what you're.
So I'll tell you the story on what I did with Google. I've had. And this is like the stuff that I was on my Patreon. Let me just share the real thing with you guys, and I'll show you what I mean. I'll go to my library. Patreon, Google. Damn, it was a long time ago.
Yeah, while you're pulling it up, let's just get to some people that are that we're lucky to have in the chat. We have ET FaceTime. We have Anish Mahayan, 112 Tests, Ahad, Clapping Cheeks, Lisa, Kim, Silly Bunt, Laura G, an always special supporter of us. We got Lisa again, Melanie. Let's see. We got Junebug. We got Mike K. Let's see. Kim, Lisa, Kim. We got Cashflow Chronicles. Just kidding. Johnny Utah. We got Hot Chris chiming in. Mike K. William. Julie. The lady, the myth, the legend. Boba the dog.
Okay.
Yeah, go for it, Hot Chris.
Okay, so one of the things I had before, I had spreads for Google between 175 and 225. They did okay. You know, they could have done a little bit better, but after their announcement with their whole quantum chip thing, and being that they've actually sold off so much, there was a little bit of mispricing on their 2027 contracts. So I bought a whole bunch of them, like about 160 spreads on Google. Let me tell you guys which strikes. So the ones that I bought were between 220 for January 27, 220 and 270. And they've appreciated pretty nicely because of this recent run up. But I'll show you guys the reasoning why I chose those specific strikes and why I think they can actually get there. So first and foremost, let's just take a look at Google. If we look at Google right now, just plain, you know, let's ignore some of the woke stuff and all the other like more subjective things. Because sometimes when people talk about Google, they can become very subjective and they avoid investments because of that subjectivity.
Yeah.
One of the things I really like about Google is that their revenue growth rate has been accelerating, and it's constant. It's going to keep doing that because they've got so many things on the horizon with Waymo, with their cloud division, with increasing prices, like you guys saw with their YouTube Premium. I mean, not YouTube TV. They increased prices another $10, right?
Yeah.
Basically, they've been able to kind of generate a huge amount of revenue growth, and it's been happening since 23. But on top of that, they're actually managing their operating expenses a lot better too. So right now, the same operating expenses that they had in last year in September of 23 is around the same amount that's there right now for September 30th. So their operating expenses are flatlined. Revenue is accelerating, operating expenses are flatlining, which means they're generating more net income, right? So you look at net income, they're generating more net income than ever before right now, okay? So that is amazing. And what are they doing with that net income? They're buying back a ton of shares. Look at the share buybacks. So they went from 14 billion outstanding to 12.5, okay, in the last 5 years. So their EPS has been a monstrous growth. So look at this. They went from, in 2023 of March, $4.50 a share to now almost doing 7.5. If we believe what the analysts are projecting out, and more than likely, which is going to be the case, if you look on a forward basis in 2026, at the end of 2026, you're looking at about $10.57 of earnings. More than likely, they exceed this by at least 50 cents. It's going to be 11. If you look at Google and where they have been historically on PE, on forward PE, okay, let's just take a look at that metrics. Let me look at financials ratios. Okay, you look at their forward PE, literally for the last 20 years has been sticking around this 22 level. Sometimes when markets are overvalued, it jumps up to like 29, but pretty much it stays around 22 to 25. All right. And if you go even further, like, you know, on the PE level, so you see it's always usually trading around 25 PE. All right. What does this mean? That means that in the future, if you take that same multiple and you apply it, you can actually get a good target, right? So if we're looking at this, we're looking at about 2026 at the end of it, about 11, so a little bit higher than this. And usually you'll see it in the EPS forecast over here, where the highest, what analysts are saying, is about 12, and what the lowest are saying is about 9. Average is about 10. I'm going to go a little bit higher because I think Google right now has some acceleration going on because of its cloud division. You're looking at 11. 11 times 25 is what? Just say, hold on. 11 times 25. There you go. So that's your top line ceiling right there. You buy the 220, sell the 270. The spread price when I bought it was about $9.50. I got some that executed at 10, which means that's a 5x return in 2 years. not freaking bad.
Steven, the rebuttal.
There is no rebuttal.
Then do you have any compliments to add?
Yeah, I mean, look, Alphabet is the cheapest in the Mag 7 right now. It's trading at around 18 times 2026 earnings, 19 times 2026 earnings. I've heard from so many people, search is going to get cannibalized, ChatGPT is going to do this, DOJ, et cetera, et cetera. Nothing has happened. Lena Khan is out. This is going to be a friendlier DOJ and FTC under the new administration. It's going to be the most pro-business administration we've seen. Q4 isn't even priced in yet. We don't know where the ad revenue from the presidential cycle is going to come in. There's just a lot of things to be looking at here. YouTube is going to increase their prices. Ad spending is going to go up. I don't see them being disrupted. Ad revenue from search is not getting disrupted. And they just announced Gemini 2.0. ChatGPT does not have a commodity on anything. I mean, between Llama, Gemini, and ChatGPT, where's the commoditization of this? I'm not buying any of the bear cases. And don't forget, they own Android. They own YouTube, Google Cloud. I forget what they're expanding at, but huge growth rate.
15 to 20%.
15
to 20%.
It's just. You're bringing up my article?
Yes.
Yeah.
That's a good chart. Bring that one up. With
This
the
one?
6 of them. I mean, when you talk about the growth here, it's insane.
Yeah.
There's no other bang for the buck. If any of the listeners are a business owner or do advertising for a company, there's only 2 places you're advertising. You're either going to Alphabet for YouTube and search, or you're going to Meta for Facebook and Instagram. There is no better bang for the buck for advertising.
And if you look at Google Cloud, I mean, this has grown pretty substantially over the past 4 years, going on 5 years now. But I don't think people recognize. So they really just hit profitability in the late 23, early 24 time period.
Mm-hmm.
So all of that, if you think about it, it's going to be relatively flat in terms of operating expenditures. And now you're growing massively. Yes, there will be an increase, right? But in terms of the revenue growth comparatively to that, it's going to go off and has started to accelerate massively to the point where I think it's I forget what the forward looking is, but I mean, we're already at over $1 billion and I think income from it. And I think we'll get closer to 2 or 4 billion next year as it continues to grow north of, and this is on a quarterly basis, if I remember correctly. I think we're getting close to 30 million or 30 billion for fiscal year. Yeah, this is quarterly. So yeah, I think you're going to get closer to, I don't remember what the numbers are off the top of my head, but basically the cloud business in terms of profitability is starting to add massive amounts of tailwinds for the company. And that's something that I highlighted as probably being the most incremental value in terms of EPS growth, coupled with the fact that you have now a crap ton of buybacks. Sorry, Chris. Crap ton of buybacks, and those coupled together will be the largest growth of the business going forward.
Yeah, and the other thing is AI tailwinds of AI cloud. Google right now is secretly, well, not secretly anymore, but they're developing themselves to be a really big player in AI. So unlike Microsoft and Amazon, which have to outsource their GPUs from NVIDIA, Google actually owns their own technology, which is a TPU. The TPUs, so their margins on their AI cloud hardware are actually much better than AWS. So eventually these guys are going to build these things out and they're actually going to make a crap ton of money from it, so.
Yeah, don't forget quantum computing.
Quantum, but the prospect of revenue from quantum is not going to be around for quite some time. But the point is, it shows that Google is still willing to invest and be innovative, I think a lot of people think that this company is not innovative, that they're just laying on their search laurels, and that's not the case at all. They are a great player in the cloud sector. They've got YouTube, which is just every advertiser's dream to be on, right? Like legacy media, let's just call a spade for what it is. Legacy media is dead. Everyone gets their information on YouTube. Everyone watches YouTube all day. Hell, we're on YouTube right now, right? Google Spaces, Google Office, all those things. Adoption is just out of this world. And then you have cloud layered on top, and then you've got all these premium services that are on top of that. I mean, you can't get a better business than this, you know.
I mean, think about this. The Food Network just surpassed CNN with viewers. Did you see that article?
Yeah, I did.
I mean,
I didn't see it.
Yeah, Google it. It is unbelievable.
That's insane.
I think Alphabet's a buy. I think it's still trading at depressed levels.
Yeah.
You know what?
And it's a safety play.
Told me about Warner Brothers Discovery. I don't know why he didn't.
Yeah, I thought we were all friends here, but
it's the safety play too, by the way. Like you look at the market today, went down, Google stayed nearly flat. Okay. After a almost a 10% run over the last 2 days. Okay. If we do get a quote unquote recession, Google is immune to that shit. All right. If the stock goes down, they just buy back more shares. They got so much fucking cash sitting on the balance sheet. It's nuts. You know?
Yeah, they're literally making over $100 billion in cash flow from operations on an annual basis and growing. Yeah. It's mind-boggling. So there's only going to be more buybacks. They're going to start giving out dividends. They're already giving out dividends. So I mean, what else do you want from a company right now? My hope is though that while I like dividends, my hope is that they don't go crazy with the dividends. And I guess at the current rate, though, they can continue to buy back as much stock, and they'll probably decrease the amount of dividends they have to pay unless they increase the payout extremely high.
Yeah.
So, and don't forget, their CapEx will probably tap out in a year or two. They're spending what Microsoft is spending because they have to at the moment. But at some point, that's going to be another 5 or 10 billion dropped right to free cash flow. I'm thinking that's probably 2 years off.
The other thing that to consider also is that OpenAI has been training their models using YouTube data. So, and Google's already pursuing that legally. Imagine right now you find out that pretty much all of what OpenAI has can be sued by Google, and instead they could fucking take ownership over OpenAI, a piece of it. That would be nuts as a settlement. It'd be like, so we want 50% equity in OpenAI. Imagine something like that happening.
It'd be crazy.
Yeah. But then again, remember, Google has the power to do all that stuff. I mean, all that data that you get from YouTube, all of it, technically, even though we're the creators, it's all licensed to Google, you know? And if they trained on that data, that means that Google's got a pretty good case on why to sue them. And you remember, what's her name? Mina Murati. She actually said, like, yeah. Did you train your data on YouTube? Yeah.
I remember that. That was pretty funny. That was pretty funny. Yeah. Interesting. So I agree. I've been a shareholder for quite some time. I prefer that the stock stays deflated just a little bit longer, but I know it's inevitable, right? It's already cheap. It was cheap in the 160, 150 range, like it was last month, literally. So this jump up is, in my opinion, warranted. You know, do I want to see it? No, because I want to continue to buy more. But at the same time, it's a good store of capital, and I think it's going to continue to do well. And I agree with you both. I don't think it's a sell anytime soon. I think for those people that are fearful of the politics piece of it and the wokeness going on within the organization, which I know Chris mentioned in the past. I mean, I think at the moment it's something you could look past, right? They're able to power.
The wokeness is dying, bro. It's like, did you guys see the thing with Amazon and Meta? They both donate $1 million each to Trump's inauguration fund. Everyone is kissing the ring now. You know, Sundar actually called Trump and actually spoke with him personally, one-on-one. Like, hey, can you help me not get sued in Europe? Because at the end of the day, I think Donnie is smart. Donnie's not the dumb guy. He's going to say, look, You wanna mess with me? I'll break you up. But if you're my friend, I'll be your best friend. So
Well, you got to think that he wants a legacy. He wants to go down as having the greatest economy. He brought in all business people. The fact that he tapped Sachs for the AI and crypto czar speaks volumes.
Yeah.
He is truly listening to Elon and Vance. You have a lot of very smart people that are coming on board. Bill Ackman today. At one point, he was not a Trump fan. I don't know if he was a never Trumper, but he was not a Trump fan. He was on CNBC today saying this is the most pro-business environment he has seen in his adult life coming in.
Yeah.
I mean, there's a lot of things to be excited about going forward.
Look at this. Sundar Pichai is meeting with Donald Trump at Mar-a-Lago. Pichai is just latest billionaire executive. I mean, look at this. The one thing you got to hand Donald Trump is that this guy wants innovation to be the main thing of this administration, and if they do it right, Google can do really well on it. You know, like I said, he's already got Bezos behind him. He's got Zuckerberg behind him now. If he gets Google behind him, I don't know.
There you go. Steven, as our guest, what stock do you want to bring up today?
Do we really want to go there?
Don't fuck. You can do Square. That's fine, man. You can try to pitch it.
Chris is like, don't do it.
Don't do it. But you can try.
I'd like to hear it again because I wasn't convinced the first time.
I'll listen. Put me on the bottom. Put Steven at the top right, the power position. Put me on the side. There you go, Steven. You could be on the top right. No, the other one. The other one. There you go. Go ahead, Steven.
This is Steven's podcast now. He's like Captain Phillips.
This is Steven's podcast, and we're just chilling. So go ahead, Steven. Share your thesis with us.
The high level overview. Their stock-based compensation looks like corporate greed to me. I dislike it. But when I put that aside, all the fundamental metrics for Square are improving. If we are entering a very pro-business environment, and if the Fed is going to cut again by 25 bips next week, first order of business is their merchant side. This company has underwritten $22 billion in loans since 2013, less than a 3% default rate. You are going to see more transactions, stronger consumer. Block will do better and make more money because they will get a piece of all those sales on their point of sale systems and the processing. That's one. Two, pro crypto environment. I think it's safe to say that this is going to be a much different crypto environment than the past 4 years. And the Cash App is one of the largest benefits to pro Bitcoin. I think we can all agree on that. Block is trading at 18 times 2026 earnings. It looks cheap. They've done over $1 billion in net income this year. Revenue's going up. Gross profit margin has expanded from 35 to 37.5%. This is a company that's turned the corner, and they've broken out above 75, and this could keep going. I don't think the run's over. I think this is going to run into 2025, maybe even 2026, because I think financials are going to do well. I think this will get bundled in there. And look, I'm not disagreeing with the Mitt. I am not a fan of the level. The fact that they pay more in stock-based compensation than they make in profits on an annual basis pisses me off. But that doesn't mean that the valuation doesn't look good.
So go deeper into the valuation. And is it today's valuation or an assumed valuation?
I mean, even at today's valuation is trading at 27 times earnings with 50 to 60% earnings growth over the next 2 years. And if I'll bring up the table. Hold on.
We got the people noting that Tanner, the fintech guru, has sold out.
Then you know it's time to buy. But
cold, man.
Listen, It's trading at 28 times this year's earnings.
You see this, Matt? There's no loyalty among the SoFi bros.
Yeah, no, it's a bunch of.
There's no honor amongst thieves. What are you talking about?
Now, among you SoFi bros, there's no freaking honor, bro. None.
But look, in all seriousness, 30% earnings growth next year, according to 42 analysts. That's not 2 or 3. That's a big number. And then 32 analysts are saying an average of 22.5% earnings growth in 2026. That's big growth. That means that you're going to get some good earnings beats over the next 4 to 8 quarters. And then you start looking at revenue. This is a company that's expected to grow in the double digits for many years going forward. And the valuation looks inexpensive at the moment.
What about buybacks? How extensive are the buybacks?
No,
They do have a lot of cash on the balance sheet.
Yeah.
I saw that.
That's right. $8.86 billion in cash and short-term investments. And that's a pretty big cash pile. They only have $5.5 billion or $5.9 billion in long-term debt. And then buybacks. I gotta go in quarterly, sorry. Because I think they just started or they just announced it. They just announced $1 billion in buybacks, I think.
So $1 billion buybacks are worth about what, 58 billion, I think, was so at the moment. That was on a quarterly basis, was $1 billion, or was it on
I think annual. I'd have to
annual?
double check. I mean, look, this company's got $13.47 per share in cash. I mean,
can I ask another question? So how much are they distributing in share-based compensation? Is that $1 billion actually offsetting the share-based compensation?
They are paying a disgusting amount. I guess we're sharing again. Hold on. And this is the one thing I freaking hate about the company. And I'll say it again. It's corporate greed. So the fact that they are stock-based compensation, sorry. I mean, tell me that's not corporate greed compared to their net income, which is the top line.
Yeah.
1.29 billion in stock-based compensation in the past 12 months, and they've done just over $1 billion in profit. To me, that's not okay. I'm not a shareholder yet. That's my one hang-up with the company. I've said it for a long time. This is a company that's paid about $5.5 billion in stock-based compensation since 2014. And I don't even think that they've generated more than $1.5 billion in profits since that time. So red flag right there. But that doesn't mean that won't be right-sized. And look, the numbers are the numbers. It is getting very interesting on a forward basis. So I'm willing to put all that behind me because I think that there is a good value opportunity going forward.
I can't get over the fact that your heater in your office sounds like the woman next door is screaming,
"Dude, it's
bloody murder."
deep. What do you want?
It's funny, but secondly, I just wanted to give people a heads up that no, there is not an emergency happening at Steve's house. It's just his heater, so you're good. The second thing is that bothers me. I'm with you 150%. Is the fact that everyone might be excited that you're starting to see $1 billion worth of buybacks, but that doesn't even cover the share-based compensation dilution. And that's what, at least at Google, they're buying back a crap ton of stock. And yes, they are giving out stock like it's hotcakes as well. But at least you're fully offsetting that massive amount of share-based compensation with massive amounts of buybacks. Granted, we're talking about $1 billion worth of buybacks comparatively to $75 billion a year in buybacks. But, that's a different story. But that just rubs me the wrong way. Like that massive ramp up. I mean, I understand the stock has done okay over the last, say, two years, since obviously it cratered after the pandemic. Obviously.
So Matt, so I'm going through their cash flow statement now. They've done about $2.5 billion in buybacks since 2017. The buybacks have offset the stock-based compensation a little bit. But once again, this is a company that if it goes to 140, 150, nobody is going to be thinking that that's excessive. This is a company that used to trade at 200 for quite some time.
Interesting.
Yeah, but that's when everything was in a bubble, man. I don't know if
Right.
that's the thing.
But many companies are way past those numbers. And don't forget, this is going to play on Bitcoin at this point and lower rates.
Yeah.
If you think Bitcoin's going to 150, this should do very well. And here's another thing, and this may not happen. If Microsoft buys Bitcoin, Bitcoin goes to 150 in a week.
Didn't they just reject it though?
No, they came out and said that they are consistently looking at adding different types of currencies to their reserve. They didn't flat out reject it. They didn't buy it, but they didn't reject it.
Interesting. Well, I don't want to dive down the oil rabbit hole, but I would like to reiterate at least our thesis in the short term, if that's okay.
Yeah.
So I know I personally am still in a belief that there's going to be a further leg down. We've kind of flatlined here in the oil price over the past month and a half, maybe two, at about $70 a barrel WTI. And I think a lot of that, you've seen some spikes when there's been some unrest and geopolitical issues going on in the Middle East. I'm a firm believer that with Donnie T coming back and cleaning house, that, there's going to be continued growth in U.S. oil production. You're going to see a lot less turmoil in Ukraine and Russia, hopefully, unless Biden has something to say about it before January 20th. And then hopefully as well, there's going to be a subsiding of conflict going on in Israel and Iran. And with that, oil prices will only likely push down. And coupled with the fact that Guyana's continuing to ramp production, I don't see a lot of other oil companies starting to pull back in capital expenditures. I've actually started to see one, which I think Chevron. They started to announce that they're actually going to try to cut CapEx a little bit in the coming years. But other than that, it seems like full steam ahead, and nobody wants to, I guess, be caught looking, as some may say, with underinvestment. I think at the moment everyone's still rather happy. Most companies, I'd say most, are well financially capitalized, and they don't necessarily have the amounts of debt that they've had back in, say, the 2013, 2014, 2015 timeframe. And so they have a lot of sustainability to invest through the cycle rather than swing the pendulum in terms of CapEx. So both of you, like to hear your thoughts.
Well, I mean, when we were looking at the company that we were looking at before all of this, the challenge is the debt, right? So oil and natural gas tends to be very, very CapEx heavy. And the thing is, if you don't have the money for CapEx up front because you have existing cash flows, you got to go look for those. You got to look for that money. Now, where does that money come from? It comes from the banks. Banks are going to charge you an arm and a leg, primarily because it's a cyclical business. So when you come, they're going to say, I want X, Y, and Z. And a lot of these companies, even though they have strong cash flows right now, when you factor in the amount of debt that they have on their balance sheets and the cost of that capital, it ends up being a really poor value for the shareholders, because what ends up happening is you need, like the super majors, they don't have to worry. They've got so much money coming in, and the cost basis on all of their projects is so low. They've had some of these assets for literally like 2 decades already, because they had the foresight to buy all this other stuff, especially when times were lean. And so their cost of capital and their break-even costs are so low that they can make money. These medium and small oil companies, because of all the debt on their balance sheet, they're basically making money to pay their creditors. And so there's not a lot of value left for shareholders unless oil spikes to like $80, $90 a barrel. Then they start to make some real money. But usually during that time, they end up having to spend all that money on CapEx while the money is still good. So I don't know. It's a weird conundrum to be in. But if the outlook is that Donald Trump made promises that he's going to control inflation, the last thing he wants us to see is any sort of increase in oil prices. And if he's really serious about settling this whole thing with Russia, that's Russian oil coming back to the markets.
Yep.
We already know Guyana's production is just steam. It's just climbing. So that's that. U.S. production of oil is already at like all-time highs, and it doesn't look like it's stopping anytime soon. So that's another one. So there's just the world is awash in oil right now. So I think we can safely assume that oil is going to stay between at a minimum 50, because I think after 50 things start to go completely out of the wire. Even the super majors are starting to like question like what the hell is going on. So 50 is like the baseline, and I think the top is 70. So I think right now we're trading at $70 a barrel. Under Trump regime, we could see oil trade between 50s and 70s, maybe even the high 70s. But then again, like if that's the assumption, good for creditors, bad for equity holders. You for equity, especially in small and mid cap oil players, you need 70. You need probably like 85 to above oil to make sense. So unless it's some lean fucking operation, which it can happen, but yeah.
Mr. Fiorillo, your
Yeah,
thoughts?
I'll go a step further on that. I think that we're going to see lower oil prices before we see higher oil prices. Saudi Arabia cut from 13 to 12 billion barrels per day. They're expected
million,
to
not billion. Million, not
million. Sorry, a little late. They're expected to bring back 300,000 barrels per day over the next 3 years in incremental increases. U.S. under the current administration is drilling over 13 million barrels per day. Let's just say that there is a scenario where deregulation and an easier environment could make that go higher stateside. I think that you're going to see oil prices come down a little bit. Energy infrastructure is where I would want to be at this point. I've been very big on the midstreams for a long time. You look at Kinder Morgan, I mean, that's in the mid to high 20s. It was trading around 16 to 18 for quite some time. Energy Transfer is hovering between 18 and 20. I mean, energy infrastructure shines in these environments because increased production means that there's increased transportation because that's go from A to B. The safest way to transport is through pipelines. Not to mention, they connect all the major basins to all the major hubs. So I still think that they go higher, they pay a good dividend, and they are protected by take or pay or fee-based contracts. So no matter what the volatility in oil prices is, these companies still get paid on fat spreads.
Yeah, and I definitely want to lead this into my thesis, my ending thesis. So I guess, Chris, is there anything you want to state before I kind of simplify my thoughts?
No, go for it.
So to me, I see that oil will likely be depressed for the next 6 to 12 months. I wouldn't be surprised there's a rebound sometime in 2026, but I think with a potential for some sort of market pullback and demand slowing, coupled with the fact that supply is very easy to come by and demand is not keeping up with that growth in supply, oil prices will remain demand. However, at least in the United States, Henry Hub gas is very cheap. We've recognized that. The United States continues to be the largest LNG exporter worldwide. I am bullish on LNG prices. We've already seen them go to $3.50. And there's still a lot of margin to be had if you're looking to export to Europe and as well as Japan, where they're trading at over $10 equivalent. So think about the difference in margin, right? When you talk about Brent versus WTI, you're talking $2 to $3, which ends up being maybe a 5% differential. We're literally talking about hundreds of percent differential between the price of what natural gas is selling for in Europe and what natural gas is selling for in the United States. So to me, I think that you're going to continue to see a floor on LNG prices in the short term, and it will even get exacerbated as more plants come online throughout 2026 and 2027. So my thought process is short-term oil down, long gas at the moment.
Especially infrastructure. I think that's the key, right? Like if you look at what the poster child for LNG, like, is this right here. It's just the stock LNG, which is Cheniere Energy. You know, when they didn't have any production and development was still happening, this thing was like trading in the single digits, right? Even as early on as the 2020s when we had COVID, their production really started here in 2025, 2015, 2016. I think when the first cargoes went. Since then, look at this thing. It's been on a freaking monster tear higher, and it issues a dividend. PE's pretty low right now. I was actually thinking about, and I was actually mentioned this on the Patreon, LNG might not be the worst thing to be in, especially now, because they do have, let me just pull it up 1 second.
Yeah, I think they're about to bring on a couple more trains.
Quite a few, actually. Let me just, let me just share 1 second.
For those of you guys that are interested in either providing any support to any of us, be sure to follow Steven on Seeking Alpha. I was going to say Dividend Streams, but Steven on Seeking Alpha. I posted several of his articles in the chat. Feel free, if you are interested in getting some Patreon exclusives with Discord, feel free to follow Chris's Patreon link in the description. And then I've also have a Patreon set up for donations, and I'm starting to do a little bit more with that as well if you guys are interested. So appreciate that.
Yep. So right here, these are the approved projects over in that are FERC approved. So here, Corpus Christi is under construction. I think they're about 60% of the way there. So I've got about 1.58 BCF coming online. So that's Corpus Christi stage 3. But then they also have another one, which is, let me just see. Yeah, they also have this one right here, which is another 2.3 BCF coming. Well, this one is proposed, so that's not even there yet. That's why I'm kind of bullish on next. That's why I'm bullish on another company. And once production starts coming online, it should be really nice. It should be like a repeat of the Cheniere story, LNG story, but it's going to take a really long time for it to play out. So if your time horizon is 1, 2, maybe 3 years, probably avoid it. But if your time horizon is 5 to 10, you could see a really, really nice return. Apparently June's been holding LNG for several years now. Congratulations.
I'm surprised. I'm surprised she even talks to us.
I know, with a private jet, right?
Yeah. Steve, you came on muted.
Giving away the one that you're thinking of, Energy Transfer,
that's another really good one.
Very
that's
big in
exporting.
One.
Yeah.
ET has a bunch of projects that are coming online also.
Yep.
Yeah.
No, I think it's very bullish for those companies, because you said they're toll roads, Stephen, right? And I think that's the best way to describe it. So,
can we bring production a map of either ET or Enbridge, either one?
Enbridge, I have your article up here. Do you have it in? Yeah, perfect.
I mean, look, the bottom line is nothing is impossible, but it is as close to impossible as you can get to recreate these infrastructures. I mean, you can't just go build 100,000 miles of pipe, not to mention 100,000 miles of pipe in these locations running through these basins connecting to these hubs. It is as close to impossible as you can get, considering Warren Buffett, who has the political capital and the actual capital to basically do anything, decided to buy 7,700 miles of natural gas pipelines from Dominion back in 2020 at, I think, $9.7 billion. When you included the debt on it, it was around $1.24 million per mile. If Berkshire Hathaway felt that it was better to buy the pipe instead of building it for their energy infrastructure, which they have a huge business in, there's no new competitors coming in. When you look at Enbridge, Enterprise Partners, Energy Transfer, and Kinder Morgan, those are the big four. Yeah. I mean, you can't replicate this stuff. You have a larger energy demand from data centers and AI. And when you have more drilling, you need more transportation. I think all these companies do better next year. And they're already doing really good this year.
Yeah.
Interesting.
And they're not, literally they're not impacted nearly as much with the ups and downs in the commodities market because most of them have take or pay contracts with power plants and with exporters and all the other ones. So basically, the price of natural gas drops. Okay, big deal. Volume's already paid for. You're gonna get the money. Oh, look, natural gas prices went up. Okay, big deal. Same thing. Now, sometimes they do have excess capacity and they also own their own upstream assets, but I think a lot of them have basically divested from their upstream assets. Do they have any of them? Does Enbridge ET have any upstream assets?
Very minimal.
Okay.
But look, the big thing for take or pay is company XYZ will contract X amount of volume with one of these companies. Regardless if they use that volume or not, they're paying full freight.
I'm sorry, Stephen. Can you send a link to Dougie? Why don't you join us, Doug? If you want to, if you can, because I know you work in the space, so might as well give us some information.
Yeah, I mean, look, the take or pay contracts are great because even if they don't use the full volume, they're still getting paid full freight. Yep. And then fee based, they're simply just charging a fee for transportation. Kinder Morgan, I believe, only has 4 or 5% of their revenues tied to commodity prices. More than 90% is protected by take or pay or fee based. And it's the same with ET and EPD. Now, Enbridge is, in my opinion, the triple threat because the yellow in this map here is utility companies. They're the largest utility infrastructure in North America now, in addition to being one of the largest natural gas and oil transporters. And they just acquired a huge export facility in Louisiana.
Which one? Which one?
Enbridge.
Enbridge?
Yeah.
What did they buy? Enbridge.
So last year they purchased 3 natural gas power plants in the U.S. from Dominion, I believe. And they already had if you go to Enbridge and you go to About Us and you go to utility, it'll tell you everything, but they're the largest utility player in North America now. The stats on them is actually pretty crazy.
I'm trying to see if there's any other good midstream articles. I posted your KMI and your Enbridge in the chat. I'm trying to look for your latest.
The one. Think about
the
this.
one thing. Yeah, sorry. Go ahead, Steven.
So on liquids, Enbridge delivers 5.8 million barrels of crude and liquids every day. They transport 30% of the crude produced in North America and account for 65% of U.S.-bound Canadian exports. And then when you look at their natural gas pipelines, they are doing, where is it? 20% of all natural gas consumed in the U.S. I mean, Enbridge is one of the major players. Yeah. And dividend increase for past 29 years.
Enbridge is Canadian, right?
Canadian, yeah.
Yeah, I remember that was one of the things that one of the prospective prime ministers, Poilievre, I'm sorry, I'm not Canadian, so if I'm butchering your name, I'm sorry. Pierre Poilievre was talking about how, like, right now the U.S. gets all of the oil and natural gas, and basically they take it and they export it out because Canada doesn't have any export facilities on either of their coasts, which is kind of retarded if you think about it.
Yeah, I mean, I know that they are starting to think about putting a LNG export facility on the western coast to be able.
They should. They have access. Yeah. They would have access to China, Japan, and South Korea. The biggest, one of the biggest demands for natural gas ever, and they've got the supply. It's not like they don't.
Yeah. They have the Montney. They have the what is it, Deverne? I forget, shales, and those are doing rather well. So yeah, I mean, they've literally made companies up there. I mean, lots of opportunities still. Ticker symbol for Enbridge is ENB. Thank you, Stephen, for that good chat on that. We got about 10 minutes left. Anything else other for you guys? I'm trying to think if I have any thoughts in my head about any particular companies that I've been looking at other than the Bros and Rocket Lab. But I did like what you stated, while you're maybe thinking up something, talking about infrastructure replacement and, the costs of being able to replicate something like that. I honestly think that that's why Rocket Lab is being valued at the $10-12 billion mark as well, because it's like at that point you've been able to acquire so much. It's like, okay, you might be able to build a first rocket for $300 to $500 million, but in order for you to get to a place where you're commercially successful, you actually have the execution ability, etc. We've seen companies go and do private equity deals to capture funding for about $4 or $5 billion, and they've still run out of money and go belly up. So it kind of just goes to show you that you need kind of $10 to $12 billion to be able to at least get a successful company off the ground in terms of space. Dougie, what's going on, my guy?
How's it going?
Yeah.
Any thoughts about tonight's episode? Anything you wanted to chime in with?
I guess stuff I had put in the chat. Just listening to the, kind of have to make sure I don't give away like any inside stuff, but stuff I had put in the chat. Things are very challenging right now for the energy companies. I think that Steve has landed on the right play for energy, which is like he was saying, take the toll road.
Yes.
I know that one of the largest American oil companies is going to be deleting a lot of jobs from the Houston hub, and what they don't offshore to India, they're just going to get rid of. So everyone's kind of been told already, be prepared to interview for your job early next year. So that has a lot of people feeling some type of way. Now on the pipeline side, we have a lot of both up and downstream work, but on the pipeline side, since we're taking the toll, and on the chemical pipeline side, we're doing pretty well. We're actually expanding with some other projects, especially in Louisiana. Headed out towards the south end, the Grand Isle area, plants and storage facilities. But those are moving forward quicker than this inspector and engineer is able to keep up with, at least as far as
here's the one question that's been perplexing me. Is enhanced oil recovery even a thing anymore? Do they actually do any CO2 injections anymore into the wells, or no? It's not economical.
Yeah, that's getting a little bit beyond my specialty. Yeah. I mean, like I was saying, my job is to keep the oil in the pipes.
Gotcha.
So, like, if you hear about the company, then I'm probably gonna have some uncomfortable meetings if we make the news. But
that's why I call it UDOC. Yeah. So I hear you on that. Yeah. Anytime I talk about Palantir, I say UDOC. No, I hear that. CO2 injection is a little bit interesting because you have multiple spaces.
But I know it's out there. Like I've seen the drawings. I know we do it.
I know Kinder Morgan does as well. So I know they're a huge proponent in CO2 injection in West Texas, and there's multitude of reasons why somebody would do it. It's obviously for enhanced oil recovery. It helps reduce the residual oil saturation and allows oil to flow a little bit better, reduces viscosities as well. So you can kind of basically, if you think about it, if you pressurize it up, like if you think about it in its simplest form, oil is like soda, right? It's a conglomerate of multiple different molecules. And so within it, you have methane, you have everything all the way up to tar components and So methane obviously is a gas, but if you think about it, in the reservoir, if you have a can of Coke and you look at the side of it, or a bottle of Coke, and it's got the 2-liter transparents, you don't see any gas bubbling out of it. But as soon as you open up the top, you let that pressure go, you start seeing the CO2 bubble out. Oil is the same exact way.
Mm-hmm.
Once you get pressure low enough, you actually are able to get some of that methane, ethane, propane, etc., to start bubbling out like soda. So that's why you have these big facilities with trains and everything the like, to like separation trains to help separate, oil, water, gas, and they all go off on their different streams. They're all processed and put into the pipelines, and it's where all the money gets made to put into Steven's pocket. So it's an interesting sort of thought process. But CO2 injection can be done for enhanced oil recovery, but also recently it's kind of being looked at due to carbon taxes and hopefully trying to make things slightly more renewable. So you hear things like blue steel or gray steel, or even blue hydrogen, red hydrogen, green hydrogen, and even pink hydrogen, all different types of the hydrogen that you're trying to make. Some of it's through CO2 injection, some of it's used from renewables, some of it, in terms of the pink hydrogen, is actually done through nuclear. And so there's just a big push about trying to store carbon in the ground. So CO2 injection, just to make sure that we're not emitting it into the air.
Are they getting carbon credits for that by effectively taking carbon dioxide and
precisely
back on the ground?
Yeah.
So
precisely.
the reason that's a good question, and that's one of the reasons why I was interested in Kinder Morgan, because one of Kinder Morgan's big businesses back in 2016, when I still tracked them, prior to when they went goddamn C Corp on me. Look at this. They do have CO2 pipelines all throughout around Texas. Let me see. And even I think New Mexico and some of the other areas. I wonder if it's just for enhanced oil recovery, or whether or not it's also for storage, and whether they're going to get paid for that.
Yeah, it's 10% of their business mix, Chris. 1,500 miles of pipe. At 10%. It's for enhanced oil recovery. Let me bring it up. Let me show you.
Go for it.
Oxy is also a very good company that does a lot of CO2 injection for enhanced oil recovery and carbon capture. So
yeah, look at the size of Kinder Morgan, man. It's just, these guys are freaking gigantic, and these assets. This is, how they you
cannot reproduce that.
Yeah,
you can't. That would
that'd
take 100 years to build that much pipeline.
Not to mention, you would never get through the environmental approvals process for this ever again.
Hey, apparently, if you plan $1 billion project, though, you're going to get
expedited.
Yeah, okay. Good luck with that. Try to get.
I was like, until a single judge says, "No, buddy, the judiciary trumps the executive here."
But also think about it like this: so if we are going to be net exporters again, you want companies like Energy Transfer and Kinder Morgan, because look at the vast network along the Gulf Coast, which is where all the export facilities are, or 90% of them. I mean, this is a.
What's real? What's really sad? Freaking, if you see those pipelines that are connecting, like if you scroll in, you see those pipelines that are going towards California. If California wasn't such a dick, bro, some of these pipelines could run right into California, and they could build some export facilities right there and send these fuckers off to Asia and make a huge margin improvement compared to going around the Panama Canal or the other way.
Japan would love that.
Oh yeah. I mean, the price that they're paying on the water for LNG, huge compared to the US.
Yep.
And then Chris, look at, I'm going to share Energy Transfer with you.
But Cali will never allow it. So there's actually a couple of export terminals that they're thinking about building over in Mexico. So they want to pipe the gas from Texas to Mexico and then use the Mexican West Coast to transport it out.
See, that's something Trump could make happen.
Yeah.
Say, okay, we'll deal, you can build some other stuff there if you let us, sell our oil through Mexico because California won't let us. So,
So
we'll let you build a few cars down there for tariff free if you let us sell some oil.
I'll show you guys the. Well, if you want to show your thing, you can show it. But I'll show you what I was talking about. So, do you see this right here on the map? Right here, Energencia Costa Azul Energy. That's where it would be. So basically, the pipeline would extend out from Texas and the Permian Basin, go through Mexico, and it would be right here. So right under Cali. And basically, all the shipping would be done out of here and up to there. So around Baja, I think it would go. But you see, everything is here in the Gulf of Mexico, man. Elba Island is a nice one, but the thing is, this was an import facility that they turned into an export facility, but it doesn't exactly transfer a lot. It's not very big at all. Plaque Mines is huge. Sabine Pass is gigantic. And that's one of the reasons why I'm kind of bullish on our friend over here, which I'm not going to mention, even though I've probably clued everyone freaking into it, but that's where you want to be, man. That is where you want to be.
Interesting.
Yeah, energy infrastructure is still the play.
Yeah.
Dougie, what are you investing in? What's the deal these days?
Man, you guys make a compelling case for Google. It certainly is fantastic. Right now, I'm continuing to buy Robinhood every time it dips. Yep, buying Anduril. And I'm pretty excited about the latest things going on today. And my about to enjoy the fruits of my BPY, PM, and LMNOPs the next couple of days. I am exiting my Vorn though after
Vornado position. Yeah.
I tried to sell my entire position today. Here's how liquid that is. I tried to sell my entire position today, and Fidelity was like, "Nah, bro, that order's too big."
And you're done.
You reach the most you can sell in a single day.
Wow.
It's illiquid. That's the thing. When you have illiquid stuff, it's going to be hard to sell. So
so my order alone tanked the price temporarily.
So I should buy in
15 bips.
Guys, why is no one looking at the cruise lines? That's what I want to know. Why are y'all not in this cruise line trade with me?
I'm in the cruise line trade. I just wasn't super liquid going into it, so I put in what I had.
Wait. Which one did you get in? CCL or NCLH?
I've got a little bit of both. Mostly
good for you, Dougie.
Good for mostly you, CCL.
Good for you.
But I'm not heavy like you though. I wasn't liquid at the time.
You want to know something? Someone messaged me on Discord, and they're like, "Bro, he turned me into a millionaire." And I was like, I didn't even turn myself into a millionaire. I mean, I am, but I didn't do it because of that thing.
Yeah.
Oh God,
that's fantastic. That's got to make you feel good, man.
I'll tell you right now, someone's got 1,000 contracts of CCL that they bought when we first started talking about it. They got 1,000 spreads, and they got it at a cheaper price than I did, even though I came up with this thing.
That's gotta make you feel good though.
It does.
Not as good as having it yourself, I know, but I mean,
dude, there's plenty of people that did really well, but I think cruise lines still have a long runway ahead of them. I think a lot of people don't. PK, see, there you go. He's on the thing with us, man. Congratulations, PK. You're making that money. So.
I haven't been on with Steve yet, and I do have a question for Steve. Chris is going to roll his eyes right here, but I was texting my sister about what to get my nieces and nephew for Christmas, and my nephew is now all about the football cards. Do you have a recommendation for getting started in?
I'm not big into football, but I will find it out. I think Optic is supposed to be good.
Okay.
I will get you an answer from somebody who's big into football.
See, I watch enough to know that Steve has these. I mean, I may think they're cockamamie, but he shows the Pokemon cards and he's like, "Well, it's beating the S&P."
Beats S&P. Now,
so what do you want? It is what it is, and you can't argue with that.
I will tell you, sports cards have not beat the S&P. From what the research I've done, that's why I buy sealed Pokemon.
Okay. Well, I
But-
mean, he's 9, so I can probably buy him sealed Pokemon cards too, and he would probably get just as big a kick out.
I'm almost sure you guys are freaking laundering money somewhere. I know
What
that's
are
why
you
you're
talking
doing it.
I
about?
do
Don't
own a
be saying
laundromat,
that.
Chris.
You know, like, yeah. I need
Bring
to.
it by anytime. I'll put it in the wash.
I appreciate that. Thank you. You know,
Don't be
Not
saying
that I-
that, Chris.
I sent Amit a photo not too long ago. I was like, "Do you want to know what 200 pounds of quarters looks like?" And I've got, because I mean, I count my money with a scale now.
here's a funny thing that most people don't realize. You know, most of these like Asian nail shops, they're all just giant fronts for money laundering, right? Like, I mean, yeah, they're legitimate businesses, but a lot of them have, you know, clients that may be cartels. So don't
Chris,
mess around with any
look,
of those ladies.
I have a lot of love for my Indian friends and the hustle that you and other people.
Don't tell our secrets, Dougie.
put in.
Don't tell
But
us our
look,
secrets.
Y'all ain't got nothing on the Vietnamese hustle, okay?
Really? Shit.
Oh my
That-
gosh.
You tell me
Like-
the Vietnamese are worse than us? There's
No,
no
I'm
way.
saying they hustle.
Yeah.
Like they
Really?
come here with like, the one like ball of rice to eat, and
Mhm.
10 years later they own 5 businesses, and
They
they're
work hard.
living in 5,000 square foot homes. So
Yeah, no, they work hard, man. You got to give it up to the Vietnamese, Laos. Forgot some of the other countries around there. No, they come here and they get to work. They put their kids to work.
yeah,
You know. So.
Hmm.
Yeah, I think we could end it there. You know,
Yeah.
Racism Chronicles is almost over.
that wasn't racist. That was like pro
Yeah.
diversity.
Nothing is
that
pro.
was my
Don't-
DEI moment.
That's rule number one. There's Filipinos too. I'm sorry, I forgot about my Filipino brethren. Filipinos too, hardworking race.
Yep.
Even though that technically sounded racist, I don't know if it's considered racist to compliment a feature. Is it racist? Like if you say Chinese people are good at math, is that bad? That's not bad, right?
I don't know if it's like, is it because they're Chinese or because their schools actually made them learn the math? Did you
I don't know,
see
I'm
that
just
thing Bill
saying.
Ackman tweeted yesterday? It was like in 2000, it was like, here, find the area of this weird shape, right? And then
Yeah.
like 2020, the same math test was like, which, is it 1,000, 200, or 600? And then 2020, it was, what color is the square?
I mean, the thing is, like, racism is one of those things that, like, I don't even know how it works anymore. Because if you say, oh man, black people are good at basketball, like, is that racist? No, right? But then, like, there's probably a black guy who's terrible at basketball. And he's like, that's offensive to me, and so it's technically offensive. Like, Jews are good with money. Is that wrong to say? Like, is that racist? I think that's borderline racist, right? You can't
Might
say
be
that.
borderline. I might be
I think we
borderline.
should end the podcast there.
Yeah. All right, everybody. Thank you. We will exit with the normal intro. Appreciate everybody for checking in. We had about
Thanks for
180
having me
some
on, guys.
thousand. Yeah. Thank you for coming,
Steve,
Dougie.
appreciate you sourcing that football card for me.
Yeah, I'll get you an answer.
I think
Appreciate
we need to reverse racism. You know what we need to do? We need to pick a race and say all the compliments about that race. That's what we're going to do. Okay? We're going to highlight your differences, but good ones. We're going to ignore the bad ones, okay? We're going to actually put forward the good ones. So, as an exercise, what
Greed is good.
The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good.
Huge upside potential, upwards of $60,000.